to record. Yeah, good morning. So today we'll talk about the application creation and also some details on enabling the application features. Right? So there are quite a few things that you can do when you create an application, and some of those settings are to be done at an application creation level. And once you create them at an application creation level, we cannot change them. So I'll tell you what they are, and then what settings can actually later be modified or enabled at a later point of time. Okay. So what I did was I'm logging in as a administrator. So this is my admin ID. So everybody will have their own login details. So as administrator, this is the login screen. When you first log in, this is what you will be seeing, and the application is not there. So it will ask you to create a new application or migrate from a specific different snapshot. So today I'm going to start from creating an application from scratch. I'm not going to talk about the migration. Migration aspect usually comes if you want to migrate something from your one instance to another instance, something like test to production. You want to create your production instance, or you want to take a snapshot of something else and then create an application on your instance. So that is where migration will come into picture. But for today's session, we will talk mostly on the creating a new application. I have also kept the admin guide, right? So most of the things that I'm going to speak will be available in the admin guide itself. So keep that available with you, because that has a lot of good content. So I would suggest you to read the admin guide whenever you are doing something, because it will have a lot of information. So I won't be able to speak everything that is there in the admin guide, but I'll try to give whatever is important and whatever is required as part of the these lessons, these sessions. So when I create an application, so this is a consolidation, financial consolidation close application. I'm going to click on start. When I click on start, it is going to take me to the next screen, which is the application name and the description. So there are certain restrictions on the application name. It cannot be more than 8 characters. And description, you can put anything. And my suggestion is keep the application name same across all of your instances, which means all of your test and production instances. The reason is when you migrate artifacts from one instance to another instance, you cannot change the application name, or it will not migrate the artifacts. So that is the reason you will have to ensure that the name is standard. So some people put a customer's name, FCCS, like this, or customer name FCCS, or some people put different naming conventions they use. So it's up to maximum 8 characters, and stick to the same name between your production and test instances. Otherwise, you'll have a challenge in migrating your applications from test to production. When I say migration, it could be even simple artifacts that you create a form or something. You want to migrate a form from test to production. You won't be able to do it because the application name is different. It won't allow you to do it. You'll end up recreating it. So ensure that the name is the same across your test and production instances. Description can be different. It's because it doesn't matter. You can put whatever you want. So that is on the first screen. On the next screen comes the details. This is there are a lot of things here which are very, very important for you to know. The first one is the time period, the number of months, right? 12 months and 13 months. So 12 months is usually calendar months, 12 months, and 13 months is something, an adjustment period, right? So some customers usually want to have the adjustment period at the end of the year. So that is when you have to use your 13 months concept. But from whatever I have seen in my experiences, mostly 12 months will suffice the need, because this is not a transactional system, right? This is a consolidation system. And when you say consolidation system, you can load whatever the adjustment periods balances are also into the same month, the 12th month. So that is where I have never felt the need to create 13 months, but yes, you can create 13 months, and the system allows you to load the balances in the 13th period. So for some customers who have very robust process. When I say robust closing process, for them, they might say, no, I want my consolidation system to be in sync with my GL system. So in GL system, I have 13 periods. I want to use 13 periods in consolidation. So in those cases, you end up doing 13 months. But in my career, I have not seen that. But, 12 months is usually enough. And next comes the start year, end year, first month of fiscal year, and create HYTD. The start year and end year you can modify it once you create an application. If you want to add more years in the end, you can do it, but not the start year. So the start year is something that you need to take a decision along with your customer. Some people want 2 years of historical data. Some customers want 5 years of historical data. So based on how much historical data they would need, use those many periods backwards. Start with if they say 2 years, so now it is 2021, take it as 2019. So for now, for the demo purpose, the training purpose, I'm going to start with 2020, and I'm going to take about 9 years or 8 years of data. Okay, and the fiscal month is another key one. Most countries don't do the same fiscal month as a start year. The first month as a start year. So January, right? So for us, you can change. For people in Indian regions, they use April to March. People in Australian regions, they use July to June. Right? Most countries, European countries, and then Western countries use January to December. Right? So depending upon the country, the region, the customer is located, you specify what is the start period. So system will use this first month of the fiscal year to start the quarterly process. For example, if you say my first month is April, then my quarter one is my April, May, June. If I say first month is July, then my quarter one is July, August, September. So the purpose of this demonstration, I'm going to use January, which is very easy to remember, right? January as my first month of the fiscal year. Next comes the HYTD members. If you enable HYTD, basically you will have those half year to date numbers defined in your period dimension. So you can see the first 2 quarters being rolling up to half year 1, this third and fourth quarter rolling up to half year 2, H2. So some customers would like to generate reports at a half year basis. So that is where there's a need to generate those half year to date members. I usually create them because even if they use it or don't use it, there's no harm in having those members. Right? So I usually create these HYTD members and keep it available. And comes the main currency. It's also called the application currency. All the currencies are predefined. If you want to add new currencies, yes, you can, but not at this phase of time. But yeah, you can. Most of the currencies are actually available. So depending upon where your customer is, what is their reporting currency, use that as your application currency. So customers usually residing in the United States will have US dollars as their reporting currency. So define US dollars. For customers residing in Middle East, maybe they'll have AUD, right? So depending upon where the customer is located and what kind of reporting they do with this application, specify that as your main currency. And multi-currency is one more key functionality. If you use multi-currency, then translations, everything will get applicable. Because if there's no multi-currency, there's no concept of translation, right? So everything is in single currency. Hence, multi-currency plays a picture. So I'm going to enable yes for multi-currency, and I'll go to the next step.
I have one question.
Yes, please.
Yes.
Multi-currency option. Yeah, multi-currency option. So today my application is having only one currency. After 2 years, I might have more currencies. So I can enable after 2 years.
You see, if you're foreseeing that you want to use this application with a multi-currency, enable it in the initial phase itself. Don't change in the later on, because
I mean, company may have operations currently in the domestic only for 2-3 years. Future we don't know. Future it might expand to other countries. So that time, like you might
then enable,
multi-currency.
keep it multi-currency enabled. There's no harm in having it enabled. There's no harm.
So later it is not suggestible to enable it.
Yeah, because most of this, there are certain members that are being created in the application. So let it get created, and then you'll be able to test the whole process. So if you're forcing that, see, most of the consolidation customers have multi-currencies. Most of the consolidation customers, right? So I have not seen any customer who has single currency and then runs the process only in single currency. There might be very small customers in that case. They're very regional based, and they don't have any transactions with others outside the world, right? But most of the consolidation customers I have seen use multi-currency. If you're forcing there's a need, then enable it. My suggestion is don't take it as a later option. Just enable it.
Yeah.
Okay. Okay. So here there are quite a few application feature settings, quite a few of them, and I'm going to speak about each one of them. So there's something called balance sheet hierarchy. There's three types of. Actually, this third one is fairly new one that has been there in the application. This is a basic application, which means some of the standard out-of-the-box members are not created. It allows you to have a lean application, right? When I say basic, it always have a lean application. So somebody who doesn't want a highly loaded and then all the members, all the custom movement members or out-of-the-box movement members created, out-of-the-box account members created, then they would like to go with basic because it creates very basic limited number of members in the application. But usually most customers use traditional balance sheet or net asset. And it's a traditional balance sheet. If you look at any balance sheet, right? So the balance sheet says assets equals to liabilities plus equity. That is a traditional balance sheet. So in your balance sheet, you will say one side you will have an asset, other side you will have liabilities and equity. So people say that my assets should match my liabilities and equity. And equity, of course, equity includes your income statement also, your retained earnings. So that is what the traditional balance sheet is. But whereas in net asset approach, you will have your net assets equals to total assets minus total liabilities. So that's a different approach. Some customers want to use net assets approach. Some customers use traditional balance sheet approach. Depending upon how they want to report, you can choose that. So this is already predefined for customers. You don't need to recreate this. What do you call? See, customers who want to use consolidation, they know what balance sheet approach they want to use. So usually don't change this after the application is created. So they are currently reporting in a specific way. They want to continue it in that way. So choose it based on what they need. Basic is probably very small customers who doesn't have big business or they have a smaller chart of account hierarchies, chart of account structures. They might want to use basic. But most of the customers that I have worked with use traditional balance sheet approach and net asset approach. So I'm going to stick to traditional balance sheet for this session today. And one more point. So I'll talk about cash flow, right? So if you choose basic, the cash flow is optional. Indirect cash flow is optional. Whereas if I choose traditional, it is mandatory. You cannot change it. The indirect cash flow will come directly with the application creation. Traditional approach or net asset approach. Indirect cash flow will come. But if you choose basic, you might want to choose to have it or you don't want to have it. That is what I told you, right? Basic is very small customers who doesn't have much. They have very small businesses. So that is used for basic. But most customers that we usually work with are large customers and medium enterprises. So they would like to go with the traditional or net asset. So that is the cash flow. So when you say enable this in that cash flow, system will create certain movement members within the application, and it will allow you to have that cash flow hierarchy in the application. Yes, I have. Do you have a question there?
Yeah, Hari, I have a question. So when we select this particular traditional balance sheet approach, automatically this cash flow, indirect cash flow is getting grayed out, right? So recently I got to know that if at all, if I want to configure a direct cash flow instead of indirect cash flow, in that case, do I need to select the basic approach and build my own direct cash flow in the movement dimension? Is that how I need to do?
Very few customers use direct cash flow. But if you see, the only difference between basic and then the other two is the number of members are reduced in the account dimension and in the movement dimension. So that is the difference. Everything else remains the same. So depending upon your appetite to customize the application, choose it. But if you use this traditional or net asset, systems tells you the hierarchy out of the box itself. So you don't have to recreate it. But for a customers who want to use traditional balance sheet and then have a direct cash flow, my suggestion is enable these two options, one of these options, and then build your own direct cash flow. That would be my suggestion.
Okay. Okay, thank you.
But there's no hard and fast rule saying that do it this way or the other way. Okay.
I have a
Any other questions?
So if we go with the basic, yeah, I have a question. This is Palada. So if we go with by default, the indirect cash flow will come. So can we utilize, because the difference between indirect and direct cash flow, so as per my understanding, only the difference is operating section, not in investing and financing. So can we leverage investing and financing set of movements for direct cash flow, and operating can be customized, and investing and financing can be utilized with the.
Yes, you can. But anyway, investing and financing, you actually plug in those numbers. They're not driven based on your trial balance most of the time, right? So your in the indirect cash flow, your operating cash flow, financing and investing, right? Financing and investing are usually manually inputted. Only the operating cash flow comes from your trial balance flow, based on your income statement or the balance sheet. Okay, so yes, you can leverage that. So that is where I mentioned it. Yes, you can leverage to an extent, but if you enabling this and then using direct cash flow, you'll have to build the custom hierarchies in your movement dimension, and also in your cash flow section of your movement dimension. I'll tell you when we go to that movement dimension, how and where you can create the cash flow hierarchy.
Okay, thank you.
But yes, you can leverage that, but it depends upon your appetite to customize it. Some would say I will just stick here and then customize my cash flow, or some would say I will go to basic and then customize all the hierarchies.
Okay.
It depends upon your appetite to customize. My suggestion is let's utilize the functionality of the product to the maximum possible extent, and then reduce the customizations wherever is required. That would be my approach. But yeah, different people have different thought process and their different approaches.
Okay, thank you.
Okay. Yeah, and next comes the multi-gap. Right? So in a multi-gap, you have three options again. Yes, with manual adjustments. Yes, with calculated adjustments, and then no. And this multi-gap is linked with my custom dimensions. So if we have here, right, I have custom dimensions, 4 custom dimensions. If I enable yes with multi-gap, one of the custom dimension is deactivated, which means system allows you to have 4 custom dimensions, and one of those 4 is your multi-gap. If you don't opt for multi-gap, if I say it as no, then I'll have my 4 custom dimensions enabled. If I opt for a multi-gap, system assumes that that is one of the custom dimensions you want to use, and it gives you options only for 3 custom dimensions. So people say 4 custom dimensions, which includes multi-gap. So if you choose a multi-gap, yes, then you'll have only 3 custom dimensions enabled. If you don't want to choose multi-gap, you'll have 4 custom dimensions enabled. So there are again two options in Multicap: manual adjustments and calculated adjustments. The difference between these two is, right, see, there are two different gaps. Assume that there are two different gaps. One is a local gap. For India, it is Ind AS, right? And then there's a IFRS gap. So what some businesses do is they want to create all the transactions in one gap, which is either the local gap or which is the IFRS gap, and they want to load only the adjustments on top of that to suit their local gap. For example, I created all my transactions as IFRS, and I want to pass only the adjustments to suit my local gap purpose. So that is where you need to choose manual adjustments. Yes, with manual adjustments. Since you are passing the adjustments manually into the application, into the multi-gap hierarchy, so that it will create the secondary gap. The primary gap is IFRS, secondary gap is in local gap. Then you need to pass adjustments manually. When you say yes with calculated adjustments, you will have to load the balances in both the gaps. For example, you need to load your trial balance in IFRS gap, you need to load the trial balance in local gap. So you need to be able to generate two different trial balances from your source system. So some customers usually have it in their GL systems. Some customers say, no, I don't want to, I have only one gap in my GL system and I want to use manual adjustments. I want to load manual adjustments to suit my local gap. So that is where it depends upon the business use case, how they have defined their GL systems, whether they have trial balance in both the gaps. If yes, and they want to load both, then yes, with calculated adjustments. Adjustments will be calculated by the system. No, if my GL system is only with single trial balance, then I want to, or sorry, single gap, then I want to load balances as manual. Then I would choose manual adjustments. Okay, that is the multi-gap. And I'll come to CT a little later. Let me come on to the journals section. On the journal, you have again two options, right? Yes and no. And on the yes side, you have yes with workflow, yes without workflow. So when I say no, which means the system will not going to allow you to pass journals. So some customers usually don't pass any journals, but I have seen those customers as very few of them. So most of them have journals to be passed to fix their data. So what I would say is load journal adjustments depends upon how customers want to do it. And again, there are two options, right? Yes with workflow, yes without workflow. When I say yes with workflow,
just sorry, in journal adjustments, I have one question.
Yes, please.
This is for entire entity dimension, entire application, right?
Entire application, correct.
Configuration.
Correct,
so
entire application.
Entity level also we can enable it, right? On top of it, if it is yes.
No, this when you say yes, the journal adjustments are at entity level only. You are coming more from a HFM perspective, right?
Right.
Yeah.
Yeah. So yeah, that forget about HFM. Yeah, but here you can use 3-4 entities. See, there in HFM you have.
So by default, it will enable for all entities.
For
or
all
entity
entities.
level also we can configure it on top of this, overwrite it.
See,
no,
it will be enabled for all entities.
Okay, got it.
It will enable all entities. So there's nothing to overwrite, right? You just load adjustments. So sometimes you'll say balance by entity level. That is what you would say it in HFM world, right? Balance by entity level. But here you're balancing.
Not that one actually. Like data audit, right? In scenario level you can say yes, but account level, scenario level you have R option is there. Account level you have no RS option is there, like that.
Yeah, but here you can pass any entities. There's no restriction. So they open it up they open it up the whole journal adjustments here. You can pass adjustments any way you want it. When I say with workflow, that is where it talks about the workflow process, which is approval process, right? You need to submit the journal, you need to approve it, and you need to post it. So before you post the journal, you need to approve it. That is what the workflow is. And I say yes, without workflow, so whoever submits it, they can just go and post it, provided they have the access to post it. They don't need to approve it. So usually the journals are posted by senior people in the finance department. They don't allow the end users to do it. So you can pass adjustments with workflow by having that approval process mechanism, or without workflow, without the approval process mechanism. I'll use without for now, or I can use it. Depends upon. Okay, I'll use without. And then intercompany. Yes. Any questions?
So for journals, does it have any relation with workflow approval process?
No, that is see there's a process management, right? That's process management is different than the journal approval process.
In planning, we call it as a workflow. So
that is here. It is called process management.
Yeah.
In FCCS, it's called process management. So there's no relation to that here in the journals. Journals is separate process.
Okay.
So journals is specific to the journals. So when you submit a journal, you need to post it for it to be reflected into your application, right? Into your balance sheet. So you have to
explicitly talking about journal workflow, not
journal workflow, not the approval process, not the process management. The process management is a little different. So that is similar to what you have in planning, but it is a little different. Journal approval is a little different.
Okay, that is
okay. Okay, and intercompany is a little tied up with my ownership management. So if you enable intercompany, then ownership will be enabled. Otherwise, ownership is not enabled. That is the reason. See, or everything ownership is all disabled. If I say yes, without tracking, also ownership is not enabled. Yes, with tracking, then ownership is enabled. Okay, so depending upon if you want to use the ownership management, then you have to mandatorily choose yes with tracking. There's no option of you enabling it without tracking and then having ownership management. That is not possible. So you have to ask the tracking mechanism to track your intercompany eliminations. You need to have with tracking, and only then you can enable your ownership. And when you enable ownership, again, there are two options: equity pickup and partner elimination. We'll come to this advanced concept a little later, but for now, we'll just talk about this intercompany with ownership. And again, intercompany entity segregation, again, addition, subtraction, and ignore. It is just to aggregate whether you want intercompany entities to add up to intercompany top, or whether you want intercompany entity balances to be subtracted from your intercompany top, or you want to completely ignore them. So this is an additional functionality that has been available in the latest releases, which is not there. Usually we stick to addition only by default. So that's how we do intercompany eliminations. And coming to CTA, again, the balance sheet approach and then comprehensive income approach. Depending upon where you want your CTA account, you define whether it's part of my comprehensive income or whether it is my balance sheet approach. And this CTA account is enabled only when multi-currency application is enabled. Because only multi-currency is there, only then the concept of multiple translation will come into picture. Only then the concept of currency translation will come into picture. So this option is enabled only if the multi-currency is enabled. So depending upon where you want your CTA account, in the part of my balance sheet, comprehensive income, enable it. If you choose this, look at it. The local gap CA-CTA is enabled. If you choose balance sheet, CTA account is enabled. So system defined that by itself. So you don't need to choose which Just need to choose what kind of CT account you need. And then here you can enter your custom members. If you don't want to use it, leave it. If you want to use it, add dimension name. If you don't use it, it won't be created. So it's a dynamically driven. Enter the name, it will create a dimension with the name. Okay. And the other option is include other data members. This is just to do the data source. To have the data source enabled, you want to use, system comes up with some default out of the box data source members. In addition to that, if you say include other data source, the other data member, it will create one more member called other data source into the hierarchy. You can enable it depending upon if you have multiple data sources and you want to segregate them. You can also add your own custom data source members in the hierarchy. But if you don't want to add it, if the out of the box is enough and you just need one additional member for other data source options, then you can just enable this. But it is not going to stop you to add more data source members in the application. You can still enter more data source members in the application. And the additional members are all available just to sync up with your HFM functionality. So translated currency input, parent input, and currency contribution input. So these can be enabled at a later point also, depending upon if you need it or not. Okay. So for now, I would not enable them. And then last one is supplemental data collection. If you want to use this application to capture supplemental data, you can enable it now, or you can enable this later also. I'm going to leave it for now. Okay, and then next screen is just to review everything. Let's see everything is fine or not. Currency is USD, multi-currency, and then you click on create. Yes, any questions?
Yeah, translated currency. Can you go back to this one?
This one.
Translated currency input means, will it also translate back to the local currency when you put the data in the translated currency?
So translated currency input, it is basically you are loading it for journals. So when you are
Okay.
this will be enabled in the journal process.
Okay.
This will be used in the journals. Translated currency input. So it will be translate. I'm sorry.
This is journal related functionality.
Yeah, this is journal related functionality. You won't be able to enter data directly into this member using smart view or anything.
Okay, okay.
This is mostly used to load data in through journals only.
Okay, journals in translated currency adjustments.
Journals in translated currency adjustments. Okay.
Okay, thank you.
But if you want to load translated currency, usually depending upon what the parent is or the contribution is, you load them. You create these two members to load the balances in. So you do translation to a parent member, parent entity level. So then load parent input, create a data called parent input and load it in that parent currency level, or at a contribution level, how much you want to contribute. You want to add some additional data at a contribution level, then enable that. I will come to these advanced topics a little late, but these options can also be enabled at a later point of time. So I'm going to park it for now. And then click on next. You park, you see everything, and everything is fine. Create the application. It will take some time, but once the creation is done, then the application will be ready.